Welcome back to Fast Money. Take a look at shares of Bed Bath & Beyond topping the tape today, up 11%. 2021 outlook gets raised here. This has been a Reddit favorite. But, Tim, what do you think of the fundamentals here?
Well, again, I think the fundamentals are still somewhat challenged. But this is a company that has been forced to do some very aggressive restructuring during all this. And look, it has been a beneficiary of e-commerce. So this has been a short interest story. This has been a company that I don't think its best days are in front of them. But this kind of move gives you the sense of where the short interest is. I think there's a lot of scrambling here.
Yeah. Pete Najarian, this is a turnaround story. I mean, you have to believe in that turnaround and the restructuring. Yep. They've done a lot. They've shed lots of parts of the drugstore part of the business, for instance. They've slimmed down on the promotions. Maybe you're not getting a 20% coupon anymore. I'm not.
Sorry, Pete.
Right. Sorry, Pete. I know you like a deal. What do you make of the stock?
Yeah. Well, it's going to hold me back from buying more of those Keurigs and all the rest of those kinds of things. I think the reality is, though, Mel, when we look at this stock, we see a stock that really does fit this whole Reddit sort of craze, right? Because we look at what the short interest is here. And they've got, obviously, the management is newer. They've been there for a little while now, trying to change things up a little bit. And while they're doing that, at the meantime, we're still seeing a stock that's basically got an incredible amount of short interest that does stand out for the crowd. And that's why I think you're seeing, when we see the moves, they're always dramatic. These volatile moves that we see out of this particular name or a GameStop or an AMC, they're all very, very similar, and they're all very similar in the structure that we're looking at as well. So I think that this is, until we see those numbers start to change, Mel, I think we're going to see this name continue to be very volatile because that short interest is at a level right now where it makes a lot of sense for those that are going after exactly what they are doing right now. This stock hit 39 early in the session and then did pull back and still finished up significantly higher, but at $33. So there's a lot of activity in there. We see it almost every day. We've had 4 or 5 hits already in the month of June. June's over now, but the month of June, we've had 4 or 5 hits of unusual. So there's a lot going on in this stock that underneath that is telling me that this isn't over just yet.
Yeah, what a staggering performance, up 87% year to date. All right, we are just getting new numbers on how many retail investors are in the market. Morgan Stanley out with a new note today saying retail traders account for roughly 10% of daily stock trading volume here in the United States. That's down from 15% in September, but still well above the longer-term median. Joining us now to discuss this, Bob Greifeld, the former NASDAQ CEO, current chairman of Virtu Financial. Bob, it's always great to chat with you.
Good to chat with you, Melissa. How are you doing today?
We're all doing great. Thanks for asking. I want to ask you about this retail trader boom because we've seen so many enter the markets. You see the activity in certain stocks in particular. And I'm wondering if you think, or if you can tell the retail investor that the playing field is level for them, because what really stands out when you go on some of these message boards, and I understand that this may not be representative of every single retail investor out there, but certainly a broad swath of the newer investor, they feel like the system is rigged. There is that perception there.
No, I don't, feel that way at all, and I don't think that is any way indicative of the general retail investor. What we've seen over the fullness of time is retail investors get very engaged in the market when they think there's a profit opportunity for themselves. Right? It wasn't too many years ago we were complaining about the dearth of retail investors. And retail investors were not in the market several years ago because they didn't think the market was going to rise. So it's certainly a sign of bullishness when you see retail investors in the marketplace. And the retail investors today, as compared to a few years ago, certainly have the most efficient opportunity to trade in the market, the most frictionless opportunity that's seen in this market across all time and across all markets, globally.
I want to delve deeper into some of the issues that some of these investors have with the quote-unquote system, Bob. And as the chairman of Virtu Financial, I think you're probably, and the former CEO of NASDAQ, you're probably the perfect person to address them. But I want to get at this issue of off-exchange trading. The numbers are pretty staggering. 47% of total volume in the United States is not routed through public or lit exchanges, so to speak. 38% go through wholesalers like a Virtu or a Citadel, 9% through the dark pool. If you take a look at individual shares, like, for instance, Reddit favorite AMC, the vast majority of shares, or the majority of shares on a daily basis, actually trade off exchange. Should we be concerned that the pricing that we see is not a full and accurate price, and so much gets routed off exchange, not on the public exchange. We see the quotes on the bottom of the screen. The ticker is public exchange pricing.
Yeah, so I would say it's very clear that the lit exchanges are fundamental for price discovery, and it's important to recognize the lit exchanges inform in a material way off exchange prices. So when you see the prices, it is governed by the lit exchange. That system is working. And when you think about where does price discovery happen, it happens in the lit exchanges. And most importantly, right, where are the price setters happening, right? They can clearly happen in the dark, but we see today price formation, price setting is clearly happening on the lit exchanges. I think the markets are working well as a result of that.
Vlad Tenev, the CEO of Robinhood, had an interesting solution, if you will, to this, and that is to allow the public exchanges to price in increments smaller than a penny, which could then, that could make it more competitive with some of the wholesalers in terms of pricing. You guys make your money because you're able to undercut by even fractions of a penny and make that spread. Would that solve this problem?
Well, I think that's a helpful step, but I think it has to be taken in conjunction with look at access fees. So to the extent that access fees were less than 50% of the minimum tick increment, I think that would make a lot of sense. So I think there's definitely ways that we can improve the market in that regard.
What would that do to Virtu's business if that were in place?
Well, so Virtu, has the situation where it's taking the counterpart of every trade. So if a retail buyer wants to, retail trader wants to buy, then we have to sell, whether we want to sell or not. And then we have to manage our position and then manage the market as a result of that. So that dynamic doesn't change per se with respect to changing tick sizes. So Virtu has done a tremendous job over the years building up its ability to be the other side of where investor sentiment is. So when sellers want to sell, we have to buy, right? Even though we might have the same sell buyer. So all that dynamic doesn't directly tie into what we're talking about today. So our core competency is be able to manage the inventory, manage the risk in an environment where we're providing liquidity on the opposite side of where the retail investor wants to be.
Okay. I want to also ask you about one issue that is really hot on these investors' mind, Bob, and that is payment for order flow and whether or not it puts the retail investor at a disadvantage. Some people who are experts in market structure say that there is an inherent conflict of interest for Virtu to do payment for order flow that best execution, you're actually looking to also maximize profit, and so therefore there's an inherent conflict there. Can you address that? How do we know that, for instance, the best price is actually the best price, and that price savings, whatever it may be, is passed on to that retail investor?
Yeah, so I think there's a degree of silliness to some of these arguments here, because one, you've got to step back and look at the retail marketplace today. So you have commission-free trading, and I've been around a lot longer than you, but I certainly remember back in the day the cost of trading and the wideness of the spreads. So now we have a zero cost for trading with spreads that are at a penny and sometimes less. So it has never been a better time to be a retail investor in the history of mankind. So that's a very good thing. Now, Virtu has, a very difficult job, and I've been around this industry for a long period of time. So they have to guarantee not just the best price you see in the lit markets, but generally price improvement on top of that. And Virtu has paid out billions of dollars in price improvement to retail investors. Retail investors are the direct beneficiary of that. Now, as a part of that, there is a payment for order flow. It varies based on the retail firm involved. And certainly nobody can hold it against a retail brokerage firm to have some source of revenue, Robinhood, Schwab, or others. And so payment for order flow is a certain part of that. But that doesn't mean that we have to look and say, okay, that is, the fundamental question. The fundamental question is, how is the retail investor being treated? The retail investor is being treated incredibly well. There's no other place on the planet that gets that kind of retail trader experience, right? They're not paying any commission, and they're getting an improvement on what's available in the lit exchanges. So
when
I'm looking for a problem to solve here.
When you say billions of dollars in price improvement, that's the report that Virtu itself published. $3 billion, I think the number was, in price improvement in 2020.
Yeah, that's $3 billion directly in the pocket of a retail investor, as compared to
unless the broker pockets some of that, which we just established, right?
No. I'm saying the retail investor, right? So you'll think about a pie, right? So the pie certainly has a price improvement element to it, which goes directly into the pocket of the retail investor. That $3 billion number is the number that went to retail investors. Hard stop, right? They're the direct beneficiary of that, and the metrics you're comparing to is what's available in the lit market, right? So you get zero commission, $3 billion of price improvement. Where is the problem?
Well, some dispute the $3 billion number, but I get what you're saying, Bob. We're out of time, but we do hope to have you back. This is a great conversation, and there's so many more questions and answers to get out there. Bob, thank you.
Thank you.
Bob Greifeld, the chairman of Virtu. The dispute that I was mentioning was the Wall Street Journal, at least, was reporting that, according to SEC figures, which I haven't personally verified, that the numbers that the wholesaler actually gave to the SEC, based on those numbers, the price improvement was actually $950 million. So it's a matter of how it calculates. That aside, that's a separate issue. But
I think the takeaway where we started out was the retail investor is here. Here to stay. So you buy the exchanges. So you have the CBOE, CME, and you have the ICE. And then also the indices are probably most likely moving higher because you have a wider base of investors.
Yeah. So first of all, I'm not sure the retail investor is here to stay. I mean, I think there's a number of factors that were probably one-offs for the retail investor. It's not to say that there isn't proliferation of information, that there's a lot of very smart, motivated folks that are involved in financial markets and have financial literacy. I think that the trade is Virtu. I actually, look, this is an incredible time to be in this position, especially as I think we're going into a much higher vol. Any Fed equals more volatility. The fact that you have good and constructive market dynamics, and this is a stock that has not performed, really, frankly, during what I think are actually pretty good tailwinds. So I think those tailwinds will continue for them, especially as we get into high-frequency trading environment that I am sure is going to come as soon as the Fed mentions. I think it's here in the fourth quarter anyway. And
by the way, Guy, you know, if you think that retail investors are the only ones trading AMC or GameStop, of course you're wrong. We pointed that out many times. But Doug Sifu, the CEO of Virtu himself, has said that institutions are trading alongside, sure, and they're getting a lot of that volume as well.
I think Bob just did an amazing job, and we had a special a couple weeks ago where one of the points I tried to make was the playing field's never been more flat for the retail investor. I mean, Pete can speak to this, as can Tim and Steve. I mean, decade, 15 years ago, or 20 years ago, when people were paying a quarter, an eighth, you know, above the print price, on top of that paying a commission, doesn't exist anymore. So there are a lot of things for people to be apoplectic about, but level playing field, in my opinion, is not one of them.
Shepard Smith here. Thanks for watching CNBC on YouTube.